Let's work through a cash budget example problem. So the problem says London Company expects to have a cash balance of $60,000 on August 1st, 2020. Relevant monthly budget data for August and September are as follows. So for each month, we're told an amount for collections from customers, payments for direct materials, direct labor, and selling and administrative expenses. And then we're told sales of marketable securities in September are expected to realize $15,000 in cash. London Company can borrow up to $50,000, and they want to maintain a minimum monthly cash balance of $30,000. So with all of that information, we need to now prepare a cash budget for August and September. So we have all of that information in the upper left, and this is what our cash budget will look like. So let's first just work through August. Our beginning cash balance. Well, we're told that on August 1st, London Company expects to have $60,000 in cash. So we'll put that $60,000 in there. And now receipts of cash. So the first one, collections from customers. We're told that in August, that's going to be $85,000. Sale of marketable securities. Well, we're told that we sold marketable securities in September, but not in August, so we don't have any there. So our total receipts are just those $85,000. Now, our total available cash, that's going to be your beginning cash balance plus your total receipts. So $60,000 plus $85,000 gives us $145,000. Now we can move on to the disbursements, so paying out cash. So there were payments for direct materials, and we're told over in the upper left corner that in August we paid $45,000 for direct materials. We paid $30,000 for direct labor, and we paid $15,000 for selling and administrative expenses. So when we add up those three, we get a total disbursements amount of $90,000. Then our next line is either the excess or the deficiency of available cash over cash disbursements. So we had $145,000 in total available cash. We spent $90,000. So we had $55,000 of excess cash. The next section is for financing. So if we didn't have that minimum monthly cash balance of $30,000 that we wanted, we would have to borrow money here. But since we have $55,000, we don't need to worry about any financing here in August, giving us an ending cash balance of $55,000. So now for September, we aren't told in the problem a beginning cash balance amount for September. However, we ended August with $55,000 in cash, which means that we're going to start September with that same amount. So we start September with $55,000. Then we move on to collections from customers, and we collected $50,000 from customers in the month of September. And then there's also the sale of the marketable securities that we're expecting will lead to $15,000 in cash. So we put that $15,000 right there. So our total receipts are $50,000 plus $15,000, giving us that $65,000 amount. Then our total available cash, that's our beginning cash balance plus our total receipts. So $55,000 plus $65,000, and we have $120,000 in total available cash. Then we can move on to the disbursements section. So direct materials. We spent $45,000 again in September for direct materials. We spent $40,000 for direct labor, and we spent $25,000 for selling and administrative expenses. So if we add up our three disbursements, we find that our total disbursements amount is $110,000. So when we take our total available cash of 120 and subtract out our disbursements, we see that we're only left with 10,000. But the company wants a minimum monthly cash balance of $30,000. So how are they going to go from that 10,000 up to 30,000? This is when they need to borrow that extra $20,000.